Now, Nigeria's stock market will enjoy the strong first quarter with returns exceeding 39%, is expected to face headwinds in the second quarter of this year. Now, analysts anticipate a slowdown driven by three factors: rising fixed income yields due to the CBN rate hikes, a decline in dividend payout compared to Q1, and the potential dilution of banking stocks due to the recently announced recapitalization exercise. At the end of the first quarter of 2024, the Nigerian Stock Exchange gave returns of 39.47% despite a double rate hike by the CBN. However, at the end of the first trading week in the second quarter, the equities market saw bearish sentiment, which continued on Monday, with the market decreasing by 0.38% or 222 billion naira at the close of trading, pushing lower the market's return year-to-date to 37.81%. Now, the Monetary Policy Committee (MPC) last month raised the monetary policy rate (MPR) to 24.75%, representing a 200 basis points increase. On the show today, we will review the first quarter performance and outlook for the second quarter, banking earnings, and the impact on the market. Welcome to Business Insight on Plus TV Africa. I am Justin Akadonia. Now, the Nigerian stock market has experienced a bullish trend since the year began this year, but witnessing significant capital gains for companies affiliated with some of the nation's prominent entrepreneurs, including Tony Elumelu, Femi Otedola, and Jim Ovia throughout the first quarter of 2024. These companies are Zenith Bank, United Bank for Africa UBA, FBN Holdings, Transnational Corporation of Nigeria, and Transco Hotels, which alongside other firms contributed to the impressive 59.13 trillion naira capital trade volume on the Nigerian Exchange Limited this quarter. Collectively, these companies, owned in part by the trio, saw their capital soar by 2.64 trillion naira on the NGX by the end of this quarter that just passed. While Otedola, Elumelu, and Ovia may not be the sole stakeholders of their respective companies, their capital gains are intricately linked to the overall performance of the NGX. My guest, Ambrose Omodio, is the Chief Research Officer at Invest Data Consulting Limited. Ambrose is a well-respected investment and company analyst with over 20 years of experience. He is known for his work as an equities analyst, his training sessions for investors, and his weekly webinars. He is also a prominent expert on the Nigerian capital market, providing analysis and insights to investors, the government, and market regulators. Ambrose Omodio joins me now to discuss further on this recent development. Many thanks for joining me, Ambrose.
Thanks for having me, Justin. Yeah.
All right, it is indeed our pleasure. Let's just dive straight into it, if we may. Now, the Nigerian stock market gained 39.8% in the first quarter of 2024, becoming the second best performing stock amid economic headwinds. What does this really mean for the nation's capital market, despite a double rate hike, by the Central Bank of Nigeria?
Actually, it tells you that the market has its own life. Despite that the economy is experiencing some headwinds, I think that our market is returning good gains for the investors. That's why every investor in the Nigerian market should understand how to invest intelligently and also follow trend. Don't forget that we experienced what we call December rally, which is called Santa Claus rally, which was extended to the month of January. And we saw January galloping as a result of what? Expectation of earnings. And also we saw that the quarterly performance of the listed companies for the previous year was also in green, apart from the marine sector that has no FS losses. That also triggered investors' expectation that yes, we have to see a better number from these companies. Yes, we know that during the previous year, as from September and November, the CBN was also advising that banks will not pay from their FS gain. Investors are factoring those into their work, their decision. But for the month of January, Nigerian market was rated as what at the best from all over the world, which was acknowledged by many investors. But in the month of February, we saw the market pulling back as a result of profit taking. Any market in the world, this is the dynamics of the market. After the market have rallied, it's said to be what? A pullback as a result of profit taking, also information that we want to diversify their portfolio to another sector or another instrument. But we saw that in the month of February, there was a profit taking in the market, or in the month of March, there was a rebound. And that was a result of what listed the company, especially the the power company from Transport Power, impacted the index for the month of March. We saw also high cap stocks, rebounding powerfully, saw the life of going as high as 1,000 naira production amount. That also impacted the index and returns a lot of money forward for investors. But in the general direction, we saw that some industries or some what we call a sectoral index saw a pullback because of profit taking also. But for the whole quarter, for the first quarter of the year, firstly, it's a good market for Nigeria, and that also have given an insight what we expect in the month of April and the second half and the second quarter of the year. But not investors not panicking. Like I've said earlier, in the first quarter, we saw about 600 basic point increase in rate. And anywhere in the world, when you say hike in rate, the capital market that especially equity market that suffer for it, I will tell you they have correlation that when there's high interest rate, you see that interest will move toward to free, what we call a free asset or low risk asset. Let me put that way, because in any investment there's no totally free. Because even the bond they're running to the 221, there's also a risk. Don't forget what happened in Ghana. That is why they don't like where is less risk. They now start to move their money because of what interest rate has been hiked, and also the rate was hiked also by the CBN just also to kind of checkmate inflation and at the same time attract foreign investors to the economy. Today we can see that the inflow of FS has also helped the CBN to manage the crisis was experiencing in the exchange market. But for me, that is just a little thing in solving our problem. We don't want to attract foreign investors with high interest rate and push the economy towards contraction. As we speak now, the private sector already crying that there's no fund for them to be because all funds are moving towards to fixed income market, fixed income instrument because of high interest rate. That means we are trying to satisfy the foreign investors and also checkmate inflation or the expense of the economy. Who knows that yes, inflation is having a toll on the economy. We need to balance it. That is where when we saw this 600 basic point high, it sent a signal that yes, the economy will go in for it, and which also we're going to.
All right, Ambrose, let's try and get some sectoral review and get some indices analysis as well. For instance, stocks that surpass the NGX ASI include the Geregu Power, which accounted for about 150.6%, Dangote Cement about 114.7%, and Bua Cement amongst other ones. But I want to get your analysis now, your review of the NGX 30, and plus how the banking subsector actually did for the fourth quarter.
No, we talk of NGS 30, we're talking of what we call the blue chip companies. These are talk that yes, every investor that look at and want to look at when they enter Nigerian market because of what liquidity in that those stocks in that NGS 30, and they perform well for the month of the first quarter of the year. But what happened that you mentioned the Regu, you mentioned Dangote and Bua leading the world, the gainer start for the quarter. I'm not surprised. The billionaires in Nigeria, they know how to because they want to maintain their rating in the global market, especially when it comes to Forbes and all those stuff. And we'll see how Geregu taking position in Dangote Cement move that stock from as low as 380 to almost 700 naira before pulling back now at rate of profit taking. Also how Geregu also move. Geregu move not because of performance, it's because of the personality behind this company. Also Boa, it's not because the performance is outstanding in the market, it's because of the personality behind them and also the holding structure. Holding structure matter that if share in issue available to the market or float is very small, price is bound to go up because this stock is not available in the market, and these billionaires are the ones that own this market. And when they move up, their rating also improve, and that's why I saw such stock those stock we mentioned on the top. And for me, it's good. That's why investors in Nigeria should also go with the billionaires. But I say invest with the billionaires, but invest with caution because these billionaires all over the world, when they are moving, their stock will move. That means if you want to really make money, also actually diversify your portfolio, you need to also identify with these billionaires and know how to take their stocks in your portfolio, either as a defensive stock with your portfolio, also to create wealth, monitoring them because they are very, very sneaky in nature, so that you won't get your finger burned. Because most times, if you are with the billionaires, the data you sell, you won't be available. You will know. That's why follow them when I profit. You want to catch up a profit. For me, it's a good thing for the market that we are seeing this personality behind our market. And that's also impacted the market positively.
All right. Let's still talk about banking, for instance. The NGX banking and the NGX insurance index appreciated by 14.76% and 26.2% year to date, respectively. But in the wake of the CBN recapitalization and the bank's agenda, all of this likely to affect their stock value.
Yeah, for the banking sector, anywhere in the world, don't forget that the bank is an engine of any economy. Even with the regulation we're expecting, it's going to be a boost for investors that understand how to invest with knowledge. I believe that with the performance we saw in the first quarter, yes, we might see some missed performance in the month of April and in second quarter of the year. But don't forget that all eyes on the banks to provide the CBN with their capitalization agenda or their plans on how to recapitalize. That will open investors' eyes on how to work, on how to invest in banking stock. But for insurance is enjoying positive increase in their premium that was done in late 2022, that was December 2022. That impacted positively on Q1, Q2, Q3 of the insurance company in 2023, and that are reflected on their numbers, which I know is going to continue also in 2024. That's why a good investor should do what we call sector rotation and also the balance of their portfolio. That's why you see funds leaving the market now for to a fixed income market. As more information is unveiled to the market, I believe that there will also be money coming back to equity market, because as to speak now, Naira have been, the kind of appreciated. Even we are thinking that Naira have appreciated because of, appreciation from almost as from 1,900 to as 1,001. But naturally, for international investor, our market is still cheap and undervalued. I believe that when they start coming to our market, they change the face of Naira. Even though funds are leaving the market now, when you start seeing these foreign investors coming back to Nigeria, because all eyes on how stable would CBN no intervention in the foreign market, exchange market be consistent. If they know that here is consistent and stable, they can plan that they are coming to Nigeria for a year or 2 years to stay. That will help us all of the market to go up. And also they want to see more general reform of this government. We have seen how subsidy was removed. We have seen also now hike in the power, the tariff. Now, how is the going to play on the economy? Because all we need that let Nigeria economy be on the path of recovery. Once foreign investors can identify that, I'll tell you that our market will also be a good destination for foreign investors.
All right. Let's stay with the banks now, because most people are really very interested in seeing how it lays out with this recapitalization. And of course, some of them just, disclosed their earnings recently. Zenith Bank PLC, one of Nigeria's largest banks, published its audited account for the fiscal year 2023, showcasing gross earnings of 2.13 trillion naira. This represents a growth of 125.4% year-on-year and is the highest gross earnings ever reported in the company's history. UBA and Zenith Bank have joined Access Core in the 20 trillion naira club in terms of total assets. Now, the three financial institutions are now the only ones with a total asset base exceeding 20 trillion naira, which is about $20 billion as of December 2023. Let's get your comment, Omodion.
Yeah, for me, the banks have really done well. And that's why I said recapitalization will not be a problem for majority of this bank, especially the Fugas or the first year bank. They are solid enough. If you look at banks that are posting about 2 trillion, let's say 2 trillion ton gross earnings for financial year ended 2023, it's a signal of where they are going. At the same time, despite that, most of them have really been impacted by FS gain. But go back and look at what is their interest income. They've done well, and that's a lot of what high interest rate. We have seen in this period from almost since 2 years now that the rates have been hiked in Nigeria to checkmate inflation. The banks have benefited from it, massively, and that's reflected on their interest income, and that's going to continue. I will say earlier that just for the first quarter of 2024, we have seen about 600 basis point hike. It's also the bank that wants to benefit from it, and I believe that with this financial position of the bank, their balance sheet, they can meet 500 billion of the CBN. Like this Fugas. Go back and see if a bank is posting about 2.something trillion gross earning, and you come back to the final position, which is the profit after tax. After they're taking care of their work, their cost of operation, their paid government tax. Also, even there's impediment about bad loan, they are taking care of it, and they are posting above 500 billion as profit. It signals that the 500 billion they have mentioned earlier for them, it's easy for them to only that they are given a kind of a guide that they should not use their retained earnings as part of the share cap. But I will tell you, these banks have about more than trillions as retained earnings. It's a plus for them, and also paying their dividend to their shareholder as in place. It's also preparing them to patronize them as they come to the market by way of right or by way of public offer. Then for me, it's a good thing for the bank, for the bank, and it's also send signal to investing public. A bank that posted 669 billion for profit in 1 year. I tell you that market can meet 500 billion capitalization of what of CBN. Why they have about 2.8 or 2.9 trillion in their everything earnings. It's as easy as either you pay dividend or you turn it to bonus or automatically you're going to capitalize your share capital. That will make it to hit. For me, this is why I said investors have to open their ears and eyes and open their ear to hear and see when they send their capitalization guideline or the CBN required that before the end of April, they should send to them. That will guide us as investor or analyst to know exactly what. But already, as we speak now, we know that the figures are set to meet the 500 capitalization of CBN. There's no cause for alarm. Our banks are heavy. It's not because they want to become to drive the $1 trillion economy we're looking at. For me, there's no panic from bank and stock.
All right, let us project for Q2. We just started this last week, as it is. For market capitalization, it stood at 59.12 trillion naira at the end of March, representing an increase of 18.2 trillion naira, or 44.49% from 40.918 trillion naira it opened for trading this year. So, what do we project? What do we foresee? What trends do we see for the second quarter? Do we see more bullish or bearish trends?
Yeah, we expect to see, for me, a mixed trend in the second quarter of the year. And this will be driven by one, the first quarter report we're expecting. We have seen rally in Q1, and let's hope that whenever markets go up, there are bound to be correction. Profit taking also be in the market. But the strength or the position of or the state of the Q1 number that will come from these banks and the general market will give insight. But for me, we don't need to depend more on the first quarter. We have already seen the performance of most companies in 2023, we saw a mixed number. That mixed number we saw for the market in 2023 going to repeat itself in first quarter because not a change in first quarter of 2024. And we're going to expect to see a mixed number. For those services that are in 2023, that trend will continue. But after that, it's going to interest us that we have seen appreciation in our naira this period. That means most of the market sector that posted loss last year and also this improving their performance because the provision for their FS loss will reduce because of our stability from 1,900 to almost 1,001 now, which is a huge recovery. But yeah, we're not yet there yet. Probably and get it at 900 or 1,005, but let's be stable. But that will improve their performance in Q2. That means in this Q2, I want to see was a missed performance. As we are seeing missed earnings for Q1 coming. Then they'll give insight of what to do. Profit taking will be there, but also government policy also coming up, also guide investors. Especially now that there's tariff increase, where will people put their money? Sector rotation will continue to look for work, where there's opportunity in terms of government policy and also expected earnings.
All right, I must say a very big thank you to you, Ambrose Omodio, for your wonderful insight and, of course, the analysis that you have made on the bank's earnings and the Q1 review. We do appreciate your time as always.
Thanks for having me.
All right, Ambrose Omodio is a stock market analyst and researcher, and we have been looking at the outlook for 2024 second quarter and, of course, the bank's earnings that were just released. That's the size of the show for this morning. I am Justin Akadonye. Many thanks for being there.